Hello and welcome to another update video about HBAR. Yeah, one of the coins that is very stubborn, doesn't really want to go down that much, but so far it has followed our projection. There are two wave counts on this chart. We have the white wave count, which is the bullish interpretation, and we have the yellow one, which would lead to another low. But if HBAR makes another low, then we're looking at new bear market lows, and it would probably also destroy long-term support. So wouldn't necessarily be really good for the chart. We have one clear pivot point, yeah, which sort of divides bullish and bearish interpretations of this chart. That is the 4.4 cent level. You can see that down here is the 78.6 Fibonacci retracement. I'm tracking the 1-2 setup here, which is the bullish scenario with a question mark, because I don't really believe it until it proves itself. So it's certainly possible. That's why I'm tracking it. Otherwise, I wouldn't even track it. So these 5 waves up here can be a leading diagonal. It looks quite good in terms of its proportions. Problem is with these diagonals, they can always extend out until really the pattern breaks. So until we see a break of the ascending wedge to the downside, we can't really say that this ascending wedge is finished. So we still need to be a bit patient. I think it is fairly likely that it's going to come down a bit lower here into the maybe touching the 38.2 Fibonacci level and touching the trend line, the ascending trend line. That would be quite likely. I think that would be quite reasonable to expect. Yeah, typically also in such a wave too, the A wave gets to the 38.2 Fib level, then bounces in a B wave and would eventually come down in a C wave. Eventually we need to see how the price is going to put in this B wave. How is it looking like? Is it going to be impulsive? Is it corrective? If it's corrective, we can say it's a B wave. If it's an impulsive move up, we have to say maybe the wave 2 already bottomed here. Do we believe that at this stage? No, not until evidence, right? Because we're looking for a clearer 3-wave structure to the downside. Now, of course, we have to be very careful because this could also be just simply a WXY structure that shows you how difficult these diagonal structures are. You can't really believe them until they prove themselves. How do they prove themselves? Well, first of all, 5 waves up. Okay, we've got that. At least we can argue we've got 5 waves up, and then a 3-wave pullback. And that 3-wave pullback needs to hold the 78.6 Fibonacci retracement level. It's at 4.4 cents. Obviously, we are quite far away from that still. We're not even close, so we give it a chance, yeah, but we really haven't got a really good view of where we are, because with diagonals you always have multiple possible interpretations. It's not an impulse. Whenever you deal with diagonals, you need to free yourself more than normally from a predictive mindset, and it's more like, okay, let's wait and see. Let's wait and see if the 4.4 cent level is holding. If it's doing that, we can look forward to a 3rd wave rally to the upside, which could, I mean, if this works out, but it's a bit speculative because we have no confirmation yet that we get a 3rd wave rally yet. Yeah. But targeting, I mean, depending on how low we go, really, let's assume we go down to the golden ratio, the 4.8 cent level, a key support level. Target would be around about 10 cents for a 3rd wave rally. Okay. But first of all, it needs to bottom, show us a clear low in place. Haven't got that at the moment, but the orange box is the area where we would expect this correction to finish, if it is one. And if it's going to be impulsive on the way down, then yeah, then it will make new lows below the 10th of June. But the key pivot that will decide between a bullish scenario and a bearish one is the 4.4 cent level. So I think the focus here can be on higher as long as we're holding 4.4 cents below that level. Yeah, it will be very uncertain where this is going to land. Certainly it would be below 4 cents, but then most likely also below 3.5, which is the so far bear market low. Also, what you need to understand is that, again, due to the nature of the diagonal, this isn't really a very good setup. Again, I think we can focus on higher, but it's not from a mindset that I'm very convinced about it. It's from one where it's really like, okay, let's wait and see if it can hold wave 2 support. Certainly, I'd be careful and wouldn't really do much personally until the 3rd wave, yeah, which is again subdividing into 5 waves, and until here we get obviously you will have a wave 1, a wave 2, then a wave 3. Within that wave 3, maybe to have a 1-2 setup or something. So another smaller degree, 5-wave move up and 3-wave pullback. But we all know how quickly they can turn around in these support areas. Just look at the rune chart. But it's not necessarily healthy to have those very aggressive rallies, because those aggressive rallies without structure, like here on the rune chart, similar story, came into support and rallied. When they are not, when they're too fast, too far, they often fail eventually. So it will be interesting to see how this is going to play out. So just, this is always possible, yeah, these, you know, these crazy corrective rallies. So again, we're focusing on the upside as long as we're holding support, knowing that it can always like go, okay? Yeah, that's my update about HBAR. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.